Hi everyone, so in today's video I'm going to show you how to prepare a trial balance. So first of all we have a list of balances and we want to know which one is a debit and which one is a credit. Okay, so first of all the first thing you want to do is to write them all down, like all of these let's see all of these like all of them, you want to write them down, like here, write them down, all of them. And what I want to do is I want to write here debit and here credit. DR is a debit and CR is a credit. So first of all, I don't know if you can see well, but I just insert a picture here, which is the same as this one in here. So first of all, we want to know what is a capital. So what is a capital? Is it a debit or is it a credit? So a capital is an equity, right? So if you didn't see my previous video about debit and credit, I will link it down below so you can check it out and know what is an equity and what is an asset and all of this. So a capital is a equity. It's an equity, so it's a credit, right? So I'm going to write here capital is a credit, and as you can see here it is 18 it's an 18,000. So I'm going to write on the credit side 18,000. Okay, now moving on to sales. Sales is a revenue. Revenue and sales have the same revenue is sales, right? So but they have different names. So revenue is sales, so it is a credit side. Purchases. Purchases. So when you purchase something, it's an asset, right? So purchases is a debit because it's an asset. 97,500. It's really easy. Once you know which one is a debit and which one is a credit, or once you know what's an asset or what's a revenue and liability, you will automatically know what's a debit and what's a credit. Now a rent is an expense, right? So rents and rates is an expenses. So an expenses is on the debit side. So it is 8,100. Also salaries is an expense, so it's a debit. 12,000. Light and heat is also a expenses, so it is light and heat is 3,680. 3,680. And then we have here selling expenses, also it's an expense, so it is 2,910. Also insurance is a expense, so it's a debit, so it is 1,420. Moving on, Also here, bad debts are sort of expenses. So when you have a bad debt, so when someone did not pay, it becomes a bad debt. So we account this on the expenses. So bad debt here, we have bad debts and it is 200. So it's a 200. So here we have a debit and then here we have credit. So here we have 200. Receivables, also a debit. 600. So receivables are debit as well because you received money, yeah, it's pretty much money. And then here we have payables. Now payables, you have to pay it, so it's a liability. So a liability is a credit. So payables, 18,300. It's a credit because you have to pay it and it's a liability. And then we have long-term loan is also a credit, which is 20. Long-term loan is 20,000. And then inventory. Inventory is on debit, 15,300. Equipment cost is 6,800 because it's an asset equipment. Also we have accumulated depreciation. Always, 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 once you see it, accumulated depreciation, it is always, always on the credit side. 1,410. Yeah, and that's it. This is how you can prepare a trial balance. It's really easy. And thank you for watching. Bye bye.